Good morning, good afternoon, good evening, wherever you are in the world. If you can hear me, kindly put in the chat. Type 1 in the chat. All right. Because today we'll be looking at order flow strategy in line with the opening price strategy. How I use it to analyze and then find trades in the market. All right, Victor says 1. That means you can hear me. All right. Now, first of all, for you to trade order flow, I will recommend you download the link in the description at ours trading platform or chatting platform. Because that is the platform you are going to use to trade order flow. Using TradingView is not that accurate. I know TradingView have footprint, volume profile, if you subscribe for the premium version. But however, the information you are getting is from the broker level, not from the exchange. So, but with ATAS, you can connect it to the exchange and you use it for your analysis. So I'm going to go to ATAS now. So this is how the interface is. Okay. So order flow is simply seeing where orders came into the market. Where are the big players playing? All right. The main thing you need to understand with order flow is how do the market work? How does the market work? And if you watch my last video, I explained everything there. The market works using the principle of auction market theory. Okay. Auction market theory. Okay. Now, if you understand this auction market theory, you're going to understand the market. Okay. Now, in every market, there are 4 participants in the market. I mean, I'm trying to. Let me go to the trading view so I can use the trading view text. Okay. For participants. Okay. Did I write 5 there? There are 4. Okay, there are 4 participants in the market. If you have a notebook, kindly take it out and write what I'm about to say. This is different from what you've been watching, all right? Because these are the people that actually move the market. So the first one, there are 2 categories actually within these 4. The first one is aggressive, and then the other one is passive. So we have aggressive and passive. Okay, now aggressive, and then we have passive. Okay, these are the categories of people. Now under this aggressive, we have the buyers, and we have the sellers. Aggressive buyers and sellers. Now, who are the aggressive buyer and who are the aggressive seller? Aggressive buyer are those that take market execution. All right. If they want to, for example, aggressive buyer wants to buy at this level, what it's going to do is to press buy, market execution, market order. Okay, that is the aggressive buyer. When you press your market order in your MT4, just click buy and the market start moving. As in, you see you start seeing your money negative or positive. That is market buy, and you're aggressive. Aggressive seller is the opposite. All right. In this case, anybody that sell at market order is an aggressive seller. All right. Now let me do something really quick. I want to pull up my MT5 account so I can show you this. So while it loads, the aggressive buyers and sellers are those that actually move the market. Now, the second category are passive buyers and sellers. Okay, passive buyers and sellers. What does this mean? These are people who attempt to buy or sell using limit order. For example, if I place a limit order, maybe when price was here, instead of me to take the trade as an aggressive buyer, I simply look below, maybe put my limit order at this price. What I've done now, or the kind of player I am, is that I'm a passive buyer because I'm waiting for the market to come to my level to execute me, or to execute my trades. All right? I'm waiting for the market to come down and execute my trade. So I'm passive. Though I'm participating, but I'm passive. While those that click buy immediately on their MT4 or MT5, are simply aggressive buyer. I believe you know the difference. If you know the difference, put it in the chat. Put 2 in the chat. If you understand what passive and aggressive means, give me 2 in the chat. And if you are confused, press 5. I'm waiting. If you understand, say press 2. If you don't understand, press 5. Because you will not understand the market if you don't understand this. Who are the player? And when you take action, are you a passive buyer or a aggressive buyer? Are you a passive seller or an aggressive seller? The moment you don't know, then what are you doing in the market? All right? So these are the key things that you have to have in your mind whenever you are analyzing the market. Who is in control? Is it the buyers? And if it is the buyers, are they aggressive? Because from there, you're going to learn some concept like absorption. Because people might be buying aggressively. Let's say at this level, we keep buying aggressively, but price do not move. So what is happening? I thought aggressive buyer moved the market. That means there's a big sell limit around that base. So you have to understand the market. All right. So let's move on. Now, the question is how do market move? If you have been following me for a while, you will notice that I don't do market structure. When I say market structure, this is what I mean. I will squeeze my chart and then say this is a low, this is a higher low, higher high, higher low, higher high, higher low. I don't do this anymore. Okay, I can get to in the chat. Good one, Victor. All right. I don't do this because this is not how the market moves. Higher lows, higher highs are not the reason why the market moves. Is that a shocker? So if you notice me, I don't do that. I simply wait for price to come to my areas of support and resistance, which is the opening price. Now, the reason I will show you why I stick to this after showing you why the market move. Now, this is how the market move. The market moved from area of balance, okay, to area of imbalance. Second new balance, okay. Move again, create balance, move. Okay, let me just stop here. I believe you understand what I mean. So, pay attention here. This area, whenever you see the market consolidate, yeah, whenever you see the market consolidate, what should come to your mind is called balance. Or acceptance. Acceptance. That means the big players have accepted that price. both buyers and sellers, they've accepted the price to do business. All right. And once they accept the price to do business, what will happen? They start accumulating their orders, either to go long or to go short. Both buyers and sellers will be here. All right. Buying at different levels, selling at different levels. All right. This is acceptance. Both buyers and sellers agree to do business here. Once they are done doing their business, price will move. This movement here is called imbalance. It's called imbalance. This movement is called imbalance. And this is also called rejection. Nobody wants to do business around these prices. So whoever wins the battle here pushes the price up. And they will not want to take any buy around there. The big players don't buy here. Rather, they buy and sell at area of balance. Some people call it fair price. Fair price, all right? So the moment, I'm going to show you all of this in the chart. So relax. In fact, I'm going to show you candle to candle. And why I stick to my opening price, and how I use volume profile and every other flow tools to help in my entries and my continuation. So now, what is market doing here with this movement? Market is pushing to previously balanced area. Previously balanced area. Once it gets there, it waits. Either to build more orders to break it up, or to accept that area to push price down. And before it does that, it has to consolidate. So this area here, we call it balance, we call it acceptance, we call it fair price. All right? Simple as that. The moment you understand this, it will improve your trading. Not higher highs, higher lows, higher highs, higher lows. All those things can lead to confusion because you don't really know which is higher low. They are not as clear as the textbook shows. So I don't waste my time doing that. For a long time, over years now, I don't trade higher highs, higher lows. Okay. Now, once it gets out of this, it seeks area of balance again. Now, why moving is imbalance? It's rejection. Come to another area of balance, push up through imbalance, get another area of balance. Now, let me show you this on the chart, on this current chart we're looking at. Are you there? On this current chart we are looking at. All right. So let me just go like this, okay? Then I'll show you candle to candle. This is candlestick depiction. And I'm also going to show you the volume profile because it's very important. But you need to understand looking at naked candles, because what actually happens there, you will not see it on the volume profile. So you can see that before market push up, it consolidates here. This is area of acceptance. The big players are buying and selling within here. And what this does is to frustrate the retail traders. Maybe you are long here. and you want to hold it probably for a swing or for some time. Price push up, you are happy. The big players sell. Price push down, you are scared. What is happening? Will the market continue going down? You hold, but eventually it went down. Maybe you are in drawdown. Maybe you are in drawdown, yeah? You cut your loss. Immediately you cut your loss, that's when market down move. Left the area of balance, walk through imbalance, came back again. This is auction market theory. Another area of balance, push, go to another area of balance. This time, it seek lower prices. Where is this taking to? Previously created area of balance. Price came down in here. Before they move, they have to accept the price here. They build their orders in here, and then price fly. Another area of acceptance. Price fly. Hope you are seeing this. If it makes sense, type 3 in the chat. If it makes sense, type 3 in the chat. And then you can see that from there, it created an imbalance. Now we go to area of balance. They are building their orders here. Now they're pushing price into area here. Finally, this is where we are. Before this market will continue pushing higher, there will have to be a pause. So for those of you that wants to join this market, let's assume you want to buy, okay? It doesn't make sense to buy here where price is right now, because any moment they can start consolidating, probably push the price down and then push up, or they consolidate and then push price up. So where you are going to come in is to train yourself. Once you start seeing negative candles and you feel that market wants to push higher, those are areas where you buy. All right? To join them and ride the trade. Just like here. But when we move out here, 1, 2, 3, you see this red bar. This is on the higher time frame. You can devise your strategy. Your strategy is now telling you this consolidation is called acceptance. And then from there, market should move up. So there's a higher chance of you getting your entry here to join them in pushing price up than for you to start chasing the market. Most times people buy at imbalance. Not that you won't make money, you will, but you don't know, maybe very soon the market will start consolidating. It's always good, either you wait for a breakout. If your strategy is a breakout strategy from here, you push it up. You can also devise a way, whatever strategy you trade. You want to be a breakout trader or a reversal trader. I love reversal trading. Okay? So those are things you ask yourself. Simple. This is all the market does every day. You don't need higher high, higher low, higher low, this and that. No. You need to understand auction market theory. You can go and make your own research. Get education. All right? That is why if you watch me in my analysis, this is what I do. I understand this. Now, let's go back to the single candles. 1 minute. So we're going to look at the candles, yeah. The auction market theory can be seen within the candles. Now, let's just start from this candle. We have this blue candle. It went up within this week, yeah. That is a consolidation. Where's my... Within this week is consolidation. Consolidation where? In the lower time frame. So if I go to 15 minutes, yeah, within this box, have you seen it? You can see we have consolidation there. It might not be that accurate. If I go to 5 minutes, you see it more. All right? Those are consolidation within the lower time frame. Let's go back to the daily. Okay? So when it push up, yeah, it got to this place, the reversal opening price, yeah. That same, the wicks there are your consolidation. Now, there are better ways to look at all of this, but I just want you to visualize it on the candlesticks. But the candlesticks have its own limitations because you are not seeing where the orders are coming in on your neck with the naked eye. But you can guess that, okay, once you see these weeks, it means consolidation. And what happened? Market consolidated it too. If you want to understand it more, go to the lower time frame. You are going to see that this is consolidation. And from there, it push up this week here, and this week is consolidation. This area of balance. All right, that is where the big players are doing the business. If I go to the 15 minutes here, you're going to see, you can see that is consolidation. Market consolidate. Once it breaks, it push up. Okay, so that is that. So what are the tools you can use to understand order flow strategies? I think my voice is lagging. It's lagging. Not easy doing this live stream. So the first tool is of volume profile. And the thing is, you have to pick 2, 3 in line with what you do. You cannot understand all. Even if you understand all, you are going to have a favorite. Okay, so in your study this. I did a video on volume profile. You can just check my channel. You are going to see it there. Go consume it. Now, volume profile, we have footprint. I'm going to show you footprints. Okay. Footprint simply shows you the orders at each price in a candle. And you can only read footprint better in the lower time frame, like the 1 minute, 5 minutes, or 15 minutes. There's no point looking at it in a daily time frame. It will be so long. Now, how many price points was touched to create that daily candle is big. So, footprint, you're going to look at delta, things like delta, cumulative volume delta, CVD. These are the things you use to make your order flow decisions. We have heat maps, knowing where liquidity is resting, who is placing limit order. The heat map here shows more of the DOM levels, prices that are seated in the depth of the market. If someone places a limit order of 1,000 lots, for example, it's going to show it's a massive way for you to know that, whoa, what's going on? If price get there, price is going to find it difficult to go through. So those kind of orders might absorb whatever you are trying to do there, right? etc. There are so many. So let's go and keep our hands dirty. How you use the order flow to analyze the market. So this is ATAS. You want to use this for 14 days free, use the link in the description. You're going to use ATAS for free for 14 days. Try to get the feel on how to use this. You're going to enjoy it a lot. All right? And when you do that, find a way to let me know. You can send me a message that you've downloaded it. I can give you my settings. All right? Because all my settings, I have the template for them. All you need to do is to install your template, download and install it, and start using. Okay. So this is the daily. If you want to understand how market moves, now, for example, why did this market come all the way down? First of all, we knew that this is area of acceptance, right? But to have a visual, we have to use the volume profile. So all I need to do is to draw from here to here, that top there. So have you seen most of the orders happened here, and the green line is the point of control. That is where the volume, the highest volume, was traded. And then this shaded, this yellow color here shows 70% of volume traded within that range, right? But as you can see, within that consolidation, we have more volumes. Now the question is, how do you read volume profile? Volume profile, okay, shows you the volume per price, not like the traditional volume that shows you per time. This shows you per price. At certain price, 20 lots entered. At certain price, 15 lots entered. At certain price, 50 lots entered. At certain price, 2 lots enters. That's what volume profile does. Helps you to understand where the big players are playing. And it's a footprint. It shows you. It's nothing you do, they don't hide it, because they have to submit their trading activities to the regulators. Okay? They have to complete their books and submit. So all these things are genuine. You're going to see where they're buying. You see where they're selling. Now what happened? Price rejected from the low, the value area low, and then pushed up. Now, that is one way. You can combine the volume profile with the footprint. Now, let me show you something. Let's draw this there. And let me delete these other ones. I will need a new laptop or a stronger machine. This OBS, even though this is a gaming laptop, is lagging. I will need to upgrade. Okay. So that is volume profile for you. If you want to understand it more, just go and watch my video. All right. Now, let me go to the 1 minute or 5 minutes. Let's go to 5 minutes. Then go back to that level and see how powerful order flows trading is. Okay. I need to increase. What month was that? January. Let me see. October, September. Yes. So it's going to take time to load. That's one of the, will you call it setback? On like trading view, you just scroll down, you see it. So this have to load historical data. 1 minute, let me get something. I'll be right back. Okay, it has completed the loading. So this is price at that level. All right. Now, another thing you can do is you change this to footprint. Okay. I have my template. So I'm going to use my template adjusted. It's going to take time again. 1 minute. Take that off. I have to go back. My system is lagging. Oh my God. I've stressed it since morning. It's very hot right now. Just bear with me. We're going to learn a great deal. Okay, we are there. So remember, this line is the value area low. And this is on the 5 minutes. So this is where competence comes in. Okay. Finally. So this is the footprint. What it's showing you is the orders at different price level. All right. So at every tick, there are certain orders going in. Okay. So let's take a look. The immediately price comes in here, start in here. You can see the bear shadow, 5 minutes chart. Just looking at the visual representation. All right. You can see that there is no much orders coming in. The volumes, we have huge volume here. Some people tried to buy, and they were cooked. Okay. The sellers were in control. This is the highest level. More buyers coming. Nothing. Sellers are taking over. Okay. At this bottom here, you can see that the volumes are becoming much. People are coming in. First thing you want to see is that there's a complete auction. A complete auction is simply when you see zero number at the bottom of the candle. This is what I mean. You can see at the bottom here, we have 1, 0. There's a misfortunate seller here. He's selling too low. That's where price reverse. So when you see that, you know that, okay, the market is ready to push. So let me bring it down. Okay. So from there, you can see more orders are coming in. Trapping, people are buying. You can see the buys are coming. The green is becoming obvious. You can see buy imbalance around there. The sellers are fading off. Whoever is selling here will be cooked. There are ways to understand this. I'm just showing you the visual on how to just read it, what has happened. But there are ways I look at this with my those of my students that are learning this from me. All right. So you can see now buyers are coming in. We are seeing greens, green. You can see here now more buyers, and then price start shifting. The sellers try to control here. But what happened? More people are buying, more people are buying in, and then you see price moving. Okay, so this is another way you can look at footprint chart. I'm going to do a separate video of footprint, okay, which will be way better than this. My system is lagging right now. All right, to have a better understanding on how to read this. How do you trade the footprint chart? I'm going to make a video. Okay, if you have any question, put in the chat. If you have any question, put in the chat. The next one I'm going to talk about will be cumulative volume delta. All right. So let me slap that in. Back to daily. Back to daily and back to normal candlesticks. You can see the daily is very huge. So let me change it to candlesticks. Now with the volume with the cumulative volume delta, you can use that to spot divergence. You remember the RSI divergence and then stochastic divergence, the MACD and the rest. Yeah, so that is it here. You apply the knowledge here. Apply the knowledge here. Okay. So like this particular on the 4-hour. Let me go to the 4-hour. Then I think after this, I have to give this laptop a break. I've overused it for years. Okay. So one thing about CFD is that wherever CFD goes, price is supposed to follow. Now, if you look at this, the CFD tracks the aggressive buyers and sellers. All right, CFD tracks the aggressive buyers and sellers. So now, From here, you can see that the CVD is going down and price is heading up. What is it telling you? What it's saying is that people were selling. However, the limit orders were winning. There are big numbers in the limit order that is absorbing this sell, and that's why the price pushed up. So from there, you can comfortably start looking for buy trades once you see absorption coming in around the support area. All right. So if you have any question, I'm going to end the stream now. All right. So you can ask your question and then we can call it a day. So going to the chart, yeah, I'm seeing Badtish says I. All right. Good evening from India. Badtish is greeting from India. Dennis Dev says I, Raba. Hello, Dennis. Victor also says I. And then Dennis, you are saying SMT. Okay, AMT. Is it auction market theory? I've explained that. So we are going to do more of this live stream. I'll catch you later. Bye-bye.